Welcome to today's video. Jim Simons is considered the most successful investor of all time, outperforming even legends like Warren Buffett and George Soros. His hedge fund, Medallion, achieved an average annual return of 66% for over 30 years. If you had invested just $100 in 1988, it would have grown to $398.7 million by 2018. Even more remarkably, Simons hired people who knew nothing about investing. Is it true that you never hired people from the investment industry? Never. Instead, he recruited mathematicians and scientists just like himself. While traditional investors relied on reports, intuition, or geopolitical news, Simons took a different route. He approached investing scientifically. He used massive datasets, mathematical models, and complex algorithms to make trading decisions, sparking a tech revolution on Wall Street. This is the story of how mathematician Jim Simons became the most successful investor of all time. So sit back, relax, and let's dive in. Jim Simons grew up as an only child in Brookline, Massachusetts, near Boston. Fascinated by math from a young age, he dedicated his life to it. After studying at MIT and the University of California, Berkeley, he built an impressive career as a brilliant mathematician. He worked as a code breaker for US intelligence during the Cold War, and later taught at elite universities like MIT and Harvard. But eventually, the academic world began to bore him. Simons started looking for ways to apply his math skills in a new direction, and that's when he had the idea to start an investment firm. In 1978, he founded Renaissance Technologies, originally named Monometrics. His approach was simple in theory. Just like he used to crack enemy codes, he now aimed to decode hidden patterns in the financial markets. The firm began trading in currencies, commodities, and bonds, avoiding stocks at first due to their complexity. Simons developed a fully algorithmic trading system, relying on data dating back to the 1800s. Then, in 1988, he launched the Medallion Fund, designed to execute trades using those algorithms. At first, the fund struggled. The breakthrough came when Simons brought in Elwyn Berlekamp, a former colleague from his code-breaking days. Berlekamp proposed short-term trading strategies, which Simons had originally rejected due to high transaction costs. But after a decade of fine-tuning their algorithms and with advances in computing power, Medallion exploded in profitability. In the year 2000, the fund returned 98.5%. It even performed during major crises, like the dot-com bust and the 2008 financial crisis, posting an 82% gain in 2008 while others lost billions. Naturally, Wall Street has long tried to crack the Renaissance code and replicate its success. Today, with better computing and more data than ever, algorithmic trading has become mainstream. Major investment banks like JP Chase even require new hires to learn coding and programming. To understand just how powerful Simons' approach was, let's compare him to Warren Buffett. While Buffett is a master of value investing, using fundamental analysis to find undervalued companies, Simons' team used automated systems and quantitative models for high-speed trading. Buffett's average annual return is an impressive 24%, but Medallion's average, a staggering 66%. That makes the Medallion Fund the most profitable hedge fund in history, and Jim Simons the man who scientifically beat the market. In 2009, Simons stepped down as CEO of Renaissance Technologies. With a personal fortune of about $27 billion, he enjoyed retirement in style, including a $100 million super yacht. But his wealth didn't just fund luxury. Simons became a generous philanthropist, supporting scientific research and education. he established foundations focusing on autism research, the origins of the universe, and more. In 2017, Forbes ranked him the 24th richest American with a net worth of $18 billion at that time. Sadly, Jim Simons passed away on May 10, 2024, at the age of 86, surrounded by family in New York. The cause of death was not publicly disclosed. His legacy, however, lives on in mathematics, in science, and on Wall Street. Thanks for watching. If you enjoyed the video, don't forget to like, comment, and subscribe for more like this. See you next time.